StarVest Venture Partners is an expansion stage fund. Our latest fund is $245 million, and we invest exclusively in B2B SaaS applications. B2B SaaS has become such a large and broad area because everything now is cloud. We've actually limited ourselves to certain particular areas within B2B SaaS so that we can be specialists in those areas. Those areas are fintech, human capital management, marketing, e-commerce infrastructure, and some other limited vertical enterprise applications. In terms of what StarVest is known for, our biggest hit that we've ever had was NetSuite, which my partner Debbie Farrington invested in at a very, very early stage, and she's actually still the lead director at that company. It's a $7 billion market cap company, so I would say that probably is one of your unicorns out there. Recently, we had a company sold to SAP Fieldglass for over $1 billion, so another one of the hits that we've had in our portfolio. In terms of what we're looking for, we're really looking for expansion stage companies. So we are not Series A investors generally, although it has happened before. We're generally what you would say is Series B, Series C investors. When we're at a Series B or Series C stage, what we're looking for is a revenue level, probably at least $2 million of revenue. $2 million to $20 million is really where our sweet spot is. In terms of our investment size, we go from about $2 to $10 million. To be at the stage that we call expansion, it's not only at $2 million of revenue, but it's probably recurring SaaS revenue from referenceable customers. We are very, very focused in our due diligence on that customer call piece of it. I would say to get from your Series A to your Series B or C, at the Series A stage, you may have a great product, you may have a great CEO, you may have maybe 1 beta or 2 beta customers. To get to that next stage where we come in, you really need to start to build up your team. You need to start being not just a one lady or one guy show. You need to have other people around you who are credible. And you need to do that between your Series A and your Series B in that 12 to maybe 18 months. When we look to fund the companies for their Series B or Series C round, we look to at least get 18 months of runway for that company. We generally realize that it's not going to be the last round, that there's going to be further rounds. So we are very focused on our portfolio on having a lot of reserves, usually about 100%. Currently, some of the things that we think are really interesting, and particularly in New York, are new marketing technologies. I think kind of the automation of marketing and different ways that people are marketing using products is interesting. I think everyone has seen the statistics that CMOs are going to have bigger budgets than CIOs in the future, so we think that this is a huge growth area. And we'd love to make investments in New York in companies in the expansion stage in that area because they're close to here. Marketing in New York make all the sense together. So that's a little bit about StarVest. There's a question, I'll take it. I have a time for a question. Oh, okay. A question? Yes, sure.
In the marketing automation space, I guess, how do you feel about a lot of glorified pieces that coming?
Yeah.
How do you sift through?
It's
Feature, but they're selling it to the enterprise.
It's amazing how many companies are out there. And we talk to CMOs all the time. I speak to CMOs all the time, and how many different products they've bought for $20K. And the real question is, are they actually using these products or is these experiments? Because if you're PepsiCo or Meredith or one of these big companies, I mean, a $20K license, while you as a company might think it's important, is sort of a nothing to them. So we really are very focused on figuring out if people are just sort of trying it because, why not for a year, or if there's actual usage happening and actual ROI happening for the clients. Because if the ROI isn't there, then the renewal rates are not going to be there, and churn in a SaaS business is, death.